All right. We are live. We're getting the invite out. If you are joining on the replay or the podcast, you can just fast forward a couple of minutes. Just know that you should read the disclaimers, which I'm going to put up on the screen. This is Stock Talk Live. This is the 30-year veteran of AI software. Was a Wall Street analyst covering these areas and supplying my research and picks to firms owned by legends like Jim Cramer, George Soros, and if you saw the movie Dumb Money, Stevie Cohen. So what are we doing here on this shoddy looking background? This don't look like a professional show. That's because I don't care. I've been retired since 2008 at the age of 38, multimillionaire. Thank you very much. Thank you, God. And just want to give back. So you're not going to get all of that hype. You're not going to get, I'm not here for all that. I'm here to educate folks and provide the research that I use in my own investing. And that's it. So there's no sponsorships. There's no advertising. There's no budget here. All right. So come on in. All I ask is that you guys spread the word. So that's the message to you newbies. Veterans, thank you very much. I see that you guys are sharing the live invite so we can get the audience going. I'm going to verify that we've got audio and video right now, and then we can get things rolling. So let's see what we got. We got a big show, of course, right? What else is new? But it's been a crazy ride. It's been an absolute crazy ride here in the market. There we go. We got audio, we got video, we got a decent audience. All right, you veterans hooking me up. It was crazy. All right, because I was literally on the phone nonstop since noon today with contacts, gathering information for you for this show. And as a result, y'all know what it is. It's Friday. It's Money Mark. It's Stock Talk Live. It's another crazy week in the stock market. We are going to talk about that. We are going to talk about AI and everything I learned about AI this week and what is happening. Okay, so that did the bubble burst? Is all this CapEx spending BS? Are there circular transactions in the industry? What does that mean? And who and what stocks are safe to buy now? What stocks will be safe to buy later, and what stocks should you avoid completely? We're going to walk through all of that. The disclaimers are on the screen. So if you continue from this point forward, you acknowledge that you have read and accepted everything that it says here. This is not investment advice. Nothing here. I am not a registered financial advisor. I am not your registered financial advisor. So that's enough. You read this yourself, and we're moving on with the show. Let's get it. All right. For you newbies, real quick, I'm Money Mark. Here's my X. There's 3 things that you should check out if you want to understand what I'm talking about, because I don't do things like the 10,000 clowns out there. Okay. I served institutions for over a decade, was able to retire well over a decade ago. It's 17 years now ago, because of the methods that I use that are not what you see out there. So if you want to understand that, there's some free resources. Again, there's no subscriptions, no sponsorships, none of that stuff. This is just so you understand what we're doing. It's like the instruction manual. You want to listen to the right here. This is the spaces that's pinned. I did this back in 2024. It's a little under 2 hours, right? But it'll teach you a lot about how I find multi-baggers. That's for you. So listen to that. Read this. We got on my blog site, markhomestocks.wordpress.com. There it is. Get Rich on Stocks. Read that. It's like a 5-minute read. And then you can watch this video on this YouTube channel, How I Make Money on Stocks. Okay? So that'll get you up to speed on everything. That'll give you a nice education on how things are done here, how to use risk reward to your advantage, because this is not a buy and hold situation. Okay, I don't hold things forever like Warren Buffett, but this isn't day trading either. My average pick stays in the portfolio like 9 months, but we've got a track record of over 40% a year. That's doubling your money every 2 years for the past 30 years. All right. Okay, so that's that. And so newbies, yeah, look, I've led you to water. You either drink or you drown. It's up to you. Let's get into it. Fear greed index. Let's make sure this is the actual number. 44 is still fear. It's been stuck in this kind of fear territory. Look, pull up the chart, and there you see it's been bouncing around, right? It gave us a brief click to the 25 level on June 26th. That denotes extreme fear. Those who know me know that I really look for something 10 or under as a sign to back up the truck. 25 doesn't tell me too much. 75 though does. At 75, usually if the charts are looking toppy and fear greed is up at 75, that's extreme greed. You want to take money off the table, and we have, and that gave us all the cash and protection to not get crushed in what just happened. Despite my investments being largely focused on AI beneficiaries, I'm only down about 3% from my all-time high. Okay, and all that coming over the last week. So that's what happens when you know how to get in properly and get out properly. And it's not rocket science. It's not, you don't need to know MACDs and moving averages and all that crazy stuff. You don't need to take a day trading course to do all this. Anyways, fear, greed, a little bit of fear, not enough. By the way, I mean, to be capitulation. I mean, sure, the market could bounce from here and just keep going. We're going to talk about that in a second. The things you need to consider in deciding if we're actually ready to bounce. Okay, but the fear greed index doesn't tell us that there was any kind of capitulation where it's a no-brainer, you should buy now because everybody's fearful. They're not. 2-year treasury, interest rates continue to rise, all else being equal. That's concerning. But during the internet bubble, interest rates were rising, and the internet stocks went cuckoo despite that. So I'm not too worried about that yet until we see clear signs of economic deterioration, and we are not seeing that. So to me, who the F cares? And then oil prices, stable versus last week. I told you, wake me up when we get over 100, 110 on oil again. And there were some people that thought we were going to straight there. Well, we didn't. We popped over 90 and then bounced right back under 80. And here we are somewhere in between. So that's kind of the quick rundown on what's going on there. Let's get to what we really care about, okay? So, which is, what do we do with our money? Right? And so from a macro perspective, there's a few things going on. I wrote an article on my blog site, just pointed it out on last week's show. And there's a few things happening actually right now specifically. Like, this is July 31st. So you got month end, okay? And all else being equal, month end tends to be positive for stocks. A lot of people's retirement money and stuff like that goes into the market around this time of the month. So if nothing else was happening in the market, that would be a driver for stocks, right? It's a catalyst. It's a tailwind. But you got tailwinds and you got headwinds, and they're all swirling at the same time. So let's go through the whole list, right? So end of month rally, you got short covering going on. What you see on the screen with regard to the hedge fund blow up, right? You may have heard about this. Hedge fund blew up. They were forced to liquidate all their public holdings. That drives stocks down, but not because of fundamental reasons. That's just pure supply and demand. I love those situations. If the market or a stock, usually a stock, is going down simply because somebody is selling, not because the fundamentals are bad, they got to make their mortgage. Somebody went near bankrupt, or a divorce hits and the wife gets half of the shares of stock and she just wants to sell it all and go buy a house in the Maldives. The stock's going to go down. But it says nothing for the value of the stock. I love taking advantage of those situations. In fact, a lot of times if I catch wind of them, I will step in, reach out to the seller and say, hey, let's make a deal. I'll buy all those shares off you instead of you selling them in the market and continuing to drive the shares down. Okay, so having this hedge fund blow up is a net positive for the market now that that deleveraging has occurred. Similarly, we had a situation in Korea, right, where all of these leveraged funds going on. It's still happening, but there's been like an apology on the part of regulators. They realize what's going on. By the way, this is exactly what happened in 1929. That massive crash in 29 came from leverage. Okay, people were able to borrow 10x what they had. So if you had a $100,000 portfolio, you could play with $1 million. And people were using that mechanism to lever up and buy stocks and buy stocks. And look, if you gave everybody in America 10 times what they have and they all bought stocks, the stock market would go cuckoo. Until it didn't. Because when the bank owns 90% of what you own, right? 100,000 yours, but they gave you have a total of $1 million to work with, right? If you lose 10% of that million, all you got left is what you owe to the bank. And the bank's going to want that money back. So you're going to have to sell the rest of what you have. And you're wiped out. And guess what? That makes stocks go down so that the next person who did the same thing ends up in the same situation. So you end up with margin calls, liquidations, and the market cascades down, kind of like what we've seen over the last few weeks. So this has been a contributor to that, right? Of course, you get short covering, which is a positive. Everybody gets short because they know this is going on. And finally, the market gets to a certain level where it can find some footing, and then the shorts get blown out. Well, they made money. That's cool, right? But now they're out, and if a short reverses the position, that's called buying, and stocks go up in that situation. So we've got an oversold bounce, we got short covering, we got end of month purchasing, we got delevering in the market, all that swirling together while we've got the Fed, Iran, and very importantly, government liquidity, which I talked about last week, all right, which is going to continue into September. And this is the thing that I am most concerned about right now. Let's pull up the QQQ chart, QQQ. And there we go. Okay. Those of you who have checked out all my educational materials know that the red line is a fundamental line. And fundamentally, we are in elevated territory. We're in yellow alert. The fundamentals on a long-term basis, you could expect to buy stocks at a cheaper price sometime in the future. And I don't mean tomorrow. Okay. The only difference is that there was one time in history, not one, 1929 was one, 1999 was another. The internet bubble. Okay. Where the stock market went well beyond the red line. The only other time in recent history that we've seen this happen, and it was spectacular. QQQ rose after hitting the red line. Let's move this down a little bit so I can tell you. In less than a year and a half, the whole NASDAQ, QQQ, the NASDAQ was up 200%. Okay? Triple an entire index in less than a year and a half. Crazy. Unprecedented. We could have a similar situation on our hands because of AI. Right? We're going to talk about the data points that will help us determine if there is a chance that we get that sort of bubble. But I'm going to tell you right now, to me, it hasn't been a bubble yet. It was overbought. When you see this kind of action right here, that's too much too fast. When you get too much too fast, you get a pullback, and we've gotten a pullback. So there you go. Boom. Iran, I don't care unless oil prices go berserk. War does not do anything to corporate profits or business here in the United States. Not to seem, unsympathetic to what's going on, but from a pure business perspective, war does not have any real impact except on the companies that it has impacts on, which is like the drone stocks maybe. And maybe we'll talk about one of those today if I have time. AVEX. Okay, so boom. Bottom line, yesterday was a big move in the market. We're going to zoom in on it. Actually, let's zoom all the way in so you can see what happened. There was that big gap up yesterday. So we had a big cascade on the 29th, and then yesterday gapped up. So that kind of helped. Yesterday looked like such a big move, but from the high of the day on Wednesday, yesterday wasn't so crazy. From the high of the day Wednesday to the end of the day Thursday, it was only a 0.7% move. But because the market crashed on the Fed comments on Wednesday, when we gapped up on Thursday, that's what made the move look like such a monster 3.5% move, because Wednesday was such a monster 2.5% drop. If you look at the equal weight S&P 500, it was actually down yesterday. It cascaded down on Wednesday, didn't do anything on Thursday, was down slightly, and it's flat today. So what does that tell us? Where we have the Qs, the NASDAQ ripping, and the S&P 500 doing nothing. Rotation, ladies and gentlemen. There's that rotation word again that I've been using. Those of you who watch the show every week, we are continuing in a rotation because the market and stocks as a whole continue to look healthy. Earnings continue to be healthy. GDP healthy. Inflation not too scary. And the high CapEx environment in AI, I mean, you heard this week, right? Apple, Amazon, Microsoft, well, Apple doesn't, right? Meta, Google last week, all keeping CapEx at least the same, but mostly rising. CapEx as a whole is now up again. The estimates for next year are up. The estimates for the rest of this year are up for CapEx spending. And all else being equal, if we're going to make more data centers, then we need more electricians. We need more turbines. We need more concrete. We need more servers. We need more networking equipment. We need more, and the whole economy benefits to some extent. It is a tangible percentage of GDP, what we're seeing here with all this CapEx spending. And it is a tremendous difference from where we were a couple of years ago, where all these giant companies were just hoarding cash, doing buybacks. Now they're spending it. A buyback doesn't help GDP. Hoarding cash doesn't help GDP. But spending cash, oh yeah, spending cash helps GDP. So the economy is doing well. So the stock market is doing well. People want to continue to buy stocks. Interest rates remain relatively low. And so it is still a great environment for stocks. And therefore, when something like the QQQ gets crushed, when the semiconductor index gets crushed, and money comes out of those sectors, they go into other sectors. Okay, software. You saw Salesforce.com. Look at that. Look at that run in Salesforce. We were talking about it down here at the white line. You guys know what the white line means. ServiceNow hit my white line, bounced underneath it, cool. Bounced underneath it again, cool. But both times rebounded to higher levels than the white line. These companies are in decent shape. ServiceNow serves an important role in AI. I don't see them getting disintermediated. And by the way, while we're at it, you got, for those of you who want large caps, right? You got CDNS, Cadence Design Systems. They help to design these semiconductors, their products and services, help to design semiconductors. Well, their stock got smushed because an AI model designed a semiconductor. Come on, man. You have to look at the devil in the details. The semiconductor that LLM designed was an old type design. It was not one of these modern NVIDIA type semiconductors. Okay? These companies, Cadence and Synopsys, also that's SNPS, So CDNS and SNPS, these companies have proprietary libraries. Okay? Without these proprietary libraries, you can't make the latest chips. And nobody's making old chips. So AI can replicate all the old chips that they want, but those are not the designs that feed these businesses. So these are companies that are offering, all else being equal, a positive opportunity to buy those stocks. Now, of course, as you can see on these charts, Synopsys a little lower in the range, right? Plenty of room. I mean, if we got back to the all-time high, you're talking $630. It's 380 right now. That would be a 65% return. Phenomenal, right? It's suffering a little bit more than Cadence because Cadence has done a good job. One company is good at designing analog chips and one is good at digital. And Cadence is getting better at doing what Synopsys does along with what they do. So it hasn't gotten hit as much. And Synopsys gets hit a little bit more because of the competitive pressure, all else being equal. But here we go. Cadence, that also looks decent, right? If that gets back to its all-time high, that's a 27% move from here. Still some room to move down, but just want to give you all the names out there and give you the framework, right? More importantly, you cannot listen to these narratives. You cannot listen to the 10,000 clowns. You have to know the devil in the details. You have to engage with a real industry expert, like not me. I'm not an industry expert. I have not spent 30 years in the semiconductor industry. I have not spent 30 years at a company like Salesforce.com. I am an analyst. I am reliant on industry experts who have spent 30 years in those industries to tell me what's real, not what you're hearing from these 10,000 clowns out on Twitter. So be careful about that because they will keep you whipping around on this roller coaster market. All right. Let's see what else we got. We got a lot to go through. I've got a whole notebook of stuff. I got a whole bunch of tabs. You see all these tabs, right? We got a new stock that I've been teasing for weeks, and AI, of course, related. But let's see what else we got. So, boom, Micron plunges as Chinese rival CXMT surges. 466% is crazy, by the way. You Asians are crazy when it comes to stocks. All right, I'm just got to tell you that. But for those who've been watching a long time, nobody heard of CXMT when I told you about it a couple months ago. Now, just 2 months later, they're surging 466% in a giant IPO, one of the largest Asian companies now by market cap. Things move fast around here, right? And yes, technically they are competitive to Micron, but no, technically they're not because they focus on the traditional DRAM that the world knew about 3-4 years ago before they started stacking these DRAMs to create high bandwidth memory for AI. CXMT does not make that. That is not easy to do, okay? I don't expect CXMT to be able to do that anytime soon. I'm not going to say never. They'll figure it out, especially with all the money they just got in their IPO, and especially since they are Chinese, and the Chinese needs a hero when it comes to the memory market, and this is going to be them. Okay? So, stay tuned. How fast they get good at HBM will determine how fast we have a new influx of supply in the market to knock down the pricing that we're seeing out of Micron and SK Hynix and Samsung. But in the meantime, nah, man. All indications are that demand for memory is not only off the charts, but causing problems because there's a lot of companies that can't get memory even though they want it badly. Okay, so when you're looking at the Micron chart, when things inflected here, and this is something that we haven't seen, look at that. Here's the long-term chart. They blew right past, right above the long-term lines. Okay, so this is something that we haven't seen since the internet bubble, and now we're at the top of this. Is this the end for Micron? I don't think so, to be honest, right? This has been a nice pullback. It's still in the channel. They're pulling it. The P ratio is really low. I was skeptical of this early on, months ago. But now that I see what's going on, the fact that any LLM has to fit on the memory, you have to put the whole model in memory or it won't work as well. Okay? And that's what's happening here because you have many models, many data centers, corporations are going to want their own. You've got these LLMs being turned into SLMs, large to small, for individual use, specialized use. Those have to be. So you have all these models out there, and each and every one of them has to fit on memory. That is not the way DRAM was used in the past. So it's a complete game change, and it's only going to get worse or better if you're Micron in terms of demand. Okay, especially, this is a good time to talk about this. You got the CapEx spending. A few weeks ago, CapEx was expected to grow 17% next year. As of about a week or two ago, 25% growth, from 17% growth to 25% growth. So the expectations are actually increasing for CapEx. That means that the hyperscalers are positive that AI is not a bubble that's bursting. Otherwise, they would cut CapEx spending. They're increasing it. And then after Amazon with a $23 million billion-dollar bond offering, after Google's offering, and the earnings reports we got out of them, now those numbers suggest 40% CapEx growth for next year. 40% on top of the craziness we've seen this year. Okay? So never mind what like Jim Chanos. Shut that. Jim Chanos? Listen, Jim Chanos likes getting a lot of attention. He's a smart guy, but he is not an expert on AI. He does not know what he's talking about. Okay? And yes, a lot of people like him are in the end going to claim victory on some kind of bubble bursting when in actuality what we have right now is a build out. This is pent up demand. We went through years without a server refresh cycle. I know because I actually invested in some stocks expecting a server refresh years ago and it didn't come. Why? Because the new stuff wasn't that much better. Kind of like the iPhone. Right? Where you skip generations. Now before, I need to get the 4, I need to get 5, I need to get the 6 because each of those iPhones were so much better than the last one. Better performance, new camera, whatever. Right? And now, what's the big difference? No big difference. I actually have 2 iPhones now, and one of them is a 12. The one I use the most is an iPhone 12. It's years old and still working fine. That's what happened to servers. Okay, where there was just small incremental increases in performance and stuff, but not enough for the corporations to say, throw out these old servers and buy new ones. That was the difference. Okay, so they kept the old servers, and then all of a sudden, boom, AI hits, and the old servers can't handle it. And now we have to upgrade. And everybody upgrades at once. It's not some gradual cycle where every year a certain number of corporations are upgrading their servers. No, nobody upgraded their servers for so long. I mean, you saw what Dell stock was looking like before this, right? 2024, 2025, oh, boring. The stock was going nowhere for years. And then, boom, everybody needs servers, AI servers, okay? That's what's happening. So instead of a gradual year, every year, some corporations, the next year, some corporation, now everybody needs it all at once because nobody's been upgrading for a long time. Okay? So, we have this build out going on, and at some point, yes, it will moderate. And yes, to some people that will look like AI is a bubble. But guess what? AI is not a bubble. There's a difference between a build out and a bubble. This is a build out, not a bubble. Okay? It doesn't mean you don't need to monitor it, right? Because at some point, if the build out ends and the ongoing growth thereafter takes a little hiccup in demand, we might have a year that sucks. We might have a year where AI stocks get crushed and the Jim Chanos of the world declare victory. That's cool. But that's not happening now. And I don't think it's happening next year based on the evidence that I've gathered from Asian contacts, from US contacts, from corporate contacts, all over the place. What I'm hearing is, number one, if you have NVIDIA stock, do not sell it. I bought more NVIDIA this week. Okay? I like buying NVIDIA at the 200-day moving average, thereabouts. I like selling it near the red line. But as I've told you, we are now heading into what I think might be that bubble phase of the market. Not that AI is a bubble, but the stocks might bubble, right? And I do think NVIDIA, from where it is right now at 200, I think we're going to 250 plus. Because what I'm hearing is that Vera Rubin production ramping up, higher estimates, more orders, more tightness. There are more people that want more NVIDIA chips, the new chips coming out, and NVIDIA's ability to deliver those, to make everybody happy, to give them what they want, not happening. That means NVIDIA is going to sell all the chips possible. That means they're going to beat guidance. That means that their bottom line numbers are probably going to beat estimates by a nice margin because they know that they don't have to discount. They can charge top dollar for their chips because they're in much higher demand than they are in supply. Now, wait a minute. I know what you'll say. Well, won't people just buy AMD chips? Well, yes, that is a great thought, except for this. AMD is in the same situation, all right? They are receiving more orders than they are able to fulfill, okay? That's what I am hearing out in the marketplace. You haven't heard it in the earnings announcements because these earnings announcements haven't come out. This is what you're going to hear in these earnings announcements. As long as my contacts are correct. They don't know everything about everything. But when I hear such a groundswell of information coming from so many contacts, it's usually true. Okay? So, bottom line, AI is not a bubble. Okay? We are seeing a pullback in the market. We may continue to see that, by the way. All right? You might see, look, today the Russell is down. The Qs are up. There's that rotation again. Right? The Russell 2000 down. The NASDAQ is up. The S&P 500 is up. Okay? So we've got a lot of things going on. The equal weight is flat. So some things are going up, some things are going down. It's a rotation going on, right? But underneath the covers, the U.S. government still needs to borrow money to get them from here, the end of July, through August, and into September when the corporate tax receipts refill their bank accounts. That's not something that we've seen in recent years since COVID. There were trillions of dollars sitting in the government coffers so that when the summer came around, they didn't need to borrow money to pay salaries and everything else. The U.S. government continues to spend money every single month, but money doesn't come in every single month. They get a ton of money at tax time, and then that money bleeds, and then they get more money at tax time, and then that money bleeds. This particular year, first time since COVID, that they don't have enough money to get them through to September. So the next month might continue to be precarious. I think it will be, to be honest, because the Russell and the S&P did not participate in this drawdown in the NASDAQ. So we might see either another rotation where the NASDAQ starts to gain a little steam, but the other indices fall because of the lack of liquidity. But it's more likely that this is just another bounce, okay, where we take another leg down and challenge this red line and, more importantly, the 200-day moving average right here, which everybody looks at. We didn't quite get there, okay? So my base case, don't take this as a prediction or anything. It's just something that says, hey, be careful, because fear greed is not in deep fear territory. Liquidity still has a month and a half to go before that reaches its zenith. The market hasn't gotten down to the 200-day moving average. And not for nothing, but the Russell and the S&P have barely moved off of their all-time highs. This was clearly a tech correction only, and the rest of the market might join that correction next. So we're going to have to be very careful and very picky about what stocks we buy here. And I've been focusing on the ones that get down to the 200-day moving average, focusing on the ones that have a lot of assets and cash behind them. Right? We'll talk about these names as we move on. So a lot of people asking me, but Mark, what about these circular financing where NVIDIA gives this company $1 billion to buy NVIDIA chips with? So what? So what? Yes, that can be a yellow flag or even a red flag in certain circumstances, but not right now, right? Like, bro, Amazon just told us that their ROI on data centers is 2 to 3 years. They spend $1 billion now, and they get that $1 billion back in 2 to 3 years. That is a tremendous payback. Okay? They're basically doubling their money in 2 to 3 years. In a situation where you can double your money in 2 to 3 years, you buy as much as you can, and that's why CapEx is going up, because the return on investment is high. Forget Michael Burry. He's an idiot. He has no idea what value these chips have over the long haul. Yes, they depreciate, but they continue to be useful, stupid. These guys. So, in that circumstance, that means that these companies are in good shape. These companies making investments in this infrastructure are actually good investments. So why should NVIDIA not invest in them? Think about it as two separate things. Don't think about it as circular. Think about it as two separate things. NVIDIA investing in a company that is a good investment, and that company turning around and saying, I'm going to spend more on CapEx because it has a great ROI. That's how you should think about this. Okay? Not, it's a circular thing. Yes, and yes, when NVIDIA makes that investment, it is implied that the company that they are investing in will spend on NVIDIA equipment. That's called competitive strategy. It's not to pump up their revenue to create a bubble to fool us into buying their stock. No, it's not a scheme. It's not a pyramid scheme. It's not a Ponzi scheme. Okay? It's a smart investment in companies that are expected to do well and increase in value, and lock them in as partners so that AMD doesn't get in there. That's smart. Until further notice. Okay? It could get ugly at some point, but not right now. By the way, though, it is kind of crazy because for every dollar of revenue NVIDIA pulls in, their market cap gets 12x that. They're trading at 12 times revenue. So insofar as they can do something that increases their revenue by $1 billion, their market cap increases by 12 billion. So yes, there is an incentive to do these circular deals, right? But I think right now that is just a side effect, right? Not Jensen Huang trying to pump his stock. He's trying to pump his business, and smartly so. What else we got? All right, we got these notes here. We'll go over that. All right, let's go over the rest of the tabs. We're doing pretty good on time. So that was Micron. Look, let's look at the charts real quick. Micron, yeah, I showed you already. That looks good. SK Hynix, hard to know because it just went public. Okay, so this is really all we can get out of that chart. All else being equal, I don't know. I would err on the side of Micron, if anything, right now. I kind of like the way Micron's chart looks. Wall Street has already looked at these valuations to death, so I wouldn't worry too much about that. Samsung, never mind. There's too much else going on with them. So that's it on that front. NVIDIA, yes. I like NVIDIA here. AMD, I'm not, I'm not so enthused at these levels. So I own NVIDIA. I am looking at Micron to buy. I don't know if I bought any yet. It's just been too crazy this week. But I think it's not a bad idea. Again, this is not investment advice. This is just spitballing, me thinking out loud. Okay. If you still think AI was a bubble, AI is not a bubble. OpenAI CFO Sarah Friar told her employees that annualized revenue in July topped that all of Q2. Okay? So for all the fears, and including, I had these fears too. I've been trying to figure out fear. There's no room for emotion in the stock market. Only facts. Facts, not fear. Okay? So when I had this fear, I said, let me find the facts. What was my fear? My fear was when I reported to you guys that, one, AI companies were subsidizing tokens. What does that mean, Mark? Easy. When you download ChatGPT and use it for free, who's paying for that? When you send a question to ChatGPT, that goes to an AI data center somewhere, a very expensive AI data center. Okay? And that costs money to run. And they send you an answer. And you have no advertising going on. You're not paying a subscription fee. What the hell's going on? They're getting you hooked on the crack. That's called subsidizing. Okay? They're subsidizing your use of AI. They were doing this in large quantities across the world. Okay? But then something crazy happened. You were able to make software. You were able to deploy agents. And people started using AI like that, and the usage went through the roof. And guess what? If you're using AI to build software and deploy agents, you're already a crackhead. You're already addicted to crack. You're not asking, why is the sky blue? Or who is the first president? You're doing some heavy duty stuff that you need to pay for. And that's exactly what the hyperscalers did. They said, whoa, 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 whoa. No more free crack. Time for us to start charging for this stuff. And then all of a sudden, everybody's bill went through the roof. Okay? Because the usage went crazy. They had what was called token maxing. Since AI is so cheap, let's have a contest to see who at the company can use the most AI. But then all of a sudden they raise the prices, and next thing you know, people are getting bills for tens of thousands, hundreds of thousands, millions. Uber said that they spent their entire year's AI budget in a few months. Okay? And what that did was fuel fears, concerns that AI spending was going to drop, at least temporarily, but dramatically, as all these companies stopped spending on AI because it's not free anymore. Well, guess what happened? As it so happens, my belief now, based on the research, is that all those companies squawking, Uber and all them, were the one percenters, the tip of the iceberg, the top movers, okay, the cutting edge users of AI. And yes, they cut back, and their spending decreased for these hyperscalers, for sure. Well, what about the other 99%? They're becoming crackheads next. They're getting addicted. And even though the pricing is going up, they're finding new uses for AI. I'm one of them. I am an AI crackhead. My spending on AI is going up every month, and I don't care. I don't care because of the value it's providing. All right? I've told you before. I could spend $100,000 on AI and it would be worth it for what I'm getting back. AI can't pick stocks, but AI can gather information like a mother. And I can analyze that data, and AI can help me analyze that data, not by telling me what it means, because AI is stupid. All right? AI is being generous. Okay? That intelligence is being given to me. It is not the AI is intelligent. AI cannot pick stocks. Do not ask AI about the value of your stock. It will not give you a good answer. Okay? It's horrible. Absolutely horrible at that. However, I've been training my AI to be a good assistant. I use Perplexity computers, so you can train your AI to do things for you. And I've trained it on what I want it to do for me so I can do my job while it does all that other stuff that I hated to do. And then put it all together. It's gathering information. I'm processing information, and boom, here we go. Every week we get this show with great information for you on what's going on, thanks to the assistance of AI, not the analysis of AI. right? And because of that value that I'm getting from AI, which I would pay $100,000 to an assistant that does what this AI does for me. $100,000. I'm still not spending $1,000 a month. Okay? And I know some of you are like, $1,000 a month, that sounds crazy. It's not crazy at all. Okay? I was spending 0, and then 20, and then 40, and then I switched to Perplexity Computer, and that's $350 a month, and then I have the overage charges, and I don't even worry about it. I want to get notified every time I get a overage charge just so I know how much I'm spending out of curiosity, but I don't care. I'm getting an overage charge basically every day now, and it's fine. All right? I blow through my month's tokens in less than 2 weeks, and I spend the rest of the month paying overage charges. Who cares? That money's coming back to me in spades. I'm up almost 100% year to date. Okay? And it's due in large part to what AI can bring to the table. And that's just me. Multiply that by 300 million people in America, 1 million corporations in America. I got relatives building businesses using AI, building entire businesses using AI. You should see the difference. You know what I'm talking about. Love out there to you. Love what you've done. See what you're doing. See the difference between displaying products based on photography and showing video created by AI to demonstrate your products. Amazing. Absolutely game-changing. Okay? And we're going to see this proliferate more and more and more. And ladies and gentlemen, that's my sneaky speech of the week. If I told you I was about to give you a speech, you would tune out. All right, let's keep going. More AI. There's that Amazon quote, by the way, for you. Anybody that's interested, I'll just leave that on the screen for a moment and take a second to say, if you like that a 30-year technology veteran who retired 16 years ago, a multimillionaire, doesn't have to do anything in life, comes here every week for 2 hours out of the goodness of his heart. Really, I don't make any money. I swore off revenue in 2015. I have not accepted money for doing anything in over 10 years. The only thing I make money off of is stocks, and I don't need to. If I put all my money, if I sold every stock I own today, put it in cash, I will not run out of money in my whole life. Okay? And therefore, I feel it's only right, because I came from zero and my mentor taught me how to do this, that I should teach other people how to do that. So here I am, 2 hours a week. If you like that, all I'm asking is give me the thumbs up, put a comment in the chat, and let people know that there's somebody here who is not one of the 10,000 clowns trying to screw you out of your money one way or the other. By the way, if you have questions, put it in the chat. Put 3 question marks in front of your question. We are going to get to Q&A. I am going to answer every question as I do every week. By the way, trolls, I will ban you. We had some poor misguided soul last week. I feel bad for him, but whatever. He's been banned from the channel. Do not pimp your stocks on the channel. So don't pimp your stocks and don't troll, because all you're going to get from me is pity and banned. There we go. So, thumbs ups, thumbs ups, thumbs ups, thumbs ups. Okay, cool. Let's go. F5 networks. You may have never heard of them. FFIV. This goes in lockstep to what I've been telling you about. Okay? Infrastructure. You've got companies out there that as AI traffic grows, they are going to get more and more business. F5 just proved that AI is not a bubble by reporting great results. ServiceNow, great results in AI. The AI results are coming back great. Yes, in some cases, the expectations may have been too high, right? So people get disappointed by the results. But that's when expectations are high. If you look at the results, they're still great results. If you didn't know what Wall Street was thinking, you would be like, wow, revenue growth accelerated. You have multi-billion-dollar companies like Microsoft, Amazon, Google, reporting that growth is accelerated. When you get that big, your growth is not supposed to accelerate. It's supposed to decelerate. You continue to grow, but at a slower rate. Not in the AI era. Okay? These companies are blowing up. So there's a number of companies that benefit from this. You got Akamai here at the 200-day moving average. You've got Twilio. Hasn't pulled back all that much, but I like Twilio a lot. I've got exposure here. You've got Okta, which provides the security, right? You've got to verify as these AI agents start going wild. An AI agent, all that is a digitized employee. All right. So just like Okta would verify somebody's access as a human being, they can do the same thing as an AI agent to verify that the AI agent is what it purports to be. I am an agent of ABC Corporation, and Okta can, right? So boom, there's a good company there. I mean, the stock has run and hasn't pulled back, but if you see a pullback, I prefer waiting till 200-day moving averages, close to it, to jump in. Okay, there is a problem here. This is the ideal time for me to raise this issue. Get your notebook out because you don't want to step on a landmine. In fact, let's see, is it time? Oh, we skipped something here. What happened? I wanted to lead off with the bad news. It is so rare that I get smoked in the market, but I got smoked. Okay. Yeah, I've got companies that miss earnings and stuff like that. That's all part of the territory because this is risk and reward, right? We're looking for companies, and in fact, I added something to my performance spreadsheet just so people could use as a reference. It's not to pat myself on the back. It's truly for reference because I don't care what happens in terms of, see this column right here that says peak return while live. When I pick a stock, right, the stock either immediately goes up or immediately goes down. And then over time, it provides a peak return, like the maximum amount, right? The stock goes up in some cases. So look at this. I'll give you an example. We got Intermap. Intermap right now is up 78% from when I picked it. But at one point, it was up 550%. That's called the peak return while live. While I have it as an open position, where did it peak out? This is great for your reference. It's not to brag, although it's cool, right? I mean, look at these performances. That adds up. What's the average? My average pick peaks out at 185% gain. All right, and these aren't like these stupid penny stocks that people pump. We're talking, real sizable companies. GeoDrill, over $100 million worth of drills. Evolve, almost a household name now in terms of security. Kraken, that went from nobody knew who that was to everybody knowing who it was, tied to Anduril, who nobody knew what it was. Now everybody knows what it is. Crescendo just keeps on rocking. TSSI, who nobody knew what that was when I named it. This is what I do, okay? Just like Air at $3 and went to like 123 bucks. I like finding names that nobody knows about that I think are about to take off in the not too distant future. So when they take off, they end up being multi-baggers. It doesn't always work out, right? We're taking a risk here. I just want to make sure that the risk is minimized by a great price on the stock. All right, that way it cushions the blow. And speaking of which, we did get a blow. And that was Radcom announcing preliminary second quarter revenue. The stock tanked, right? So now it's down. Let's pull up the chart. As you can see here, it got down to the green line, started rebounding off of that. Okay, and let's talk about this a little bit because I have a theory and it will help you understand something about your companies, not just Radcom, but all companies in this AI ecosystem. And it does have to do with what Apple just experienced, okay? Based on the research I've done, everything's fine with their customers, Radcom's customers. And that's part of the analysis I did, right? When you look at a company, you want to look at their customers to make sure everything's okay. AT&T, still spending. CapEx hasn't been shifted. Their CapEx is going to continue to grow. Rakuten, all the customers are doing great. Okay? All the Radcom customers are doing great. But unbeknownst to me, downstream from AT&T doing great, but downstream from AT&T is one of their suppliers, Ericsson. And as it turns out, Ericsson supplies the equipment that goes into the AT&T deployments that use Radcom software. Well, as it turns out, partly because of what's happening in AI, component shortages affected Ericsson's ability to get enough equipment at a good price to AT&T, and as a result, AT&T said, instead of continuing to move forward with this deployment right here, we're going to just put it to the side for a second. Hey, you guys, chill out, Ericsson, go figure this out. And Ericsson, by the way, Ericsson's figuring it out. I did research on that. Ericsson's made great progress towards figuring it out. And let us know when you figured it out, and then we'll move forward. We'll buy your equipment, we'll buy the Radcom stuff, and we'll build out our 5G standalone network, which we need for AI. So what ends up happening? You have a delay. And when you look at the press release, it says right at the top, customer deployment delays driven by higher component costs and supply constraints impact, right? It also said in here, we have not lost any customers and none of the deployments have been canceled. I confirmed all of this, and specifically ties back to memory. All right. So they don't say it here, but I'll tell you, it's memory. They don't tell you here, but it's AT&T. They don't tell you here, but it's Ericsson, the equipment supplier to AT&T. They might tell us on August 12th when they announce, right? But the fact of the matter is the story hasn't changed. They are still undefeated in head-to-head competition with NetScout and Viavi in these 5G standalone greenfield deployments, and AI is going to make this move forward. AI is going to make this move forward. But we just got, right, a rain delay. It's like you got World Series tickets, but there's a rain delay. It sucks. I feel bad. I don't feel bad. I feel horrible. Bro, I put so much work in because there is nothing I hate more in this world than to lose anything. I will do anything to win. I am undefeated in battle rap. I'm a world champion in track and field as a master. I'm not here to brag. That's just what I do. And it's not healthy, but it's great for you guys because you end up with this kind of track record in performance. So when I do lose, I don't sleep. I feel bad for everybody. I want to apologize, but I know apologize for what? I put my best foot forward, right? And in hindsight, I look back and I'm like, really? Like, how much? Like, you cannot take every stock. Imagine you taking your whole portfolio and then doing research on every single one of the customers of every company in your portfolio, and then looking into the companies that they buy products from on top of that. That is a level of anal pause that even I cannot achieve. Okay? So bottom line, it happens. But in the meantime, we've got $650 in cash backstopping the stock. If this kind of pre-announcement, the level of pre-announcement they provided us with, happened to a company that didn't have $650 in cash, the stock probably would have dropped 50%, not 20. Okay? So there is why we want these assets underneath these companies, because it helps us to cushion the blow when something like this happens. By the way, the activists are still there, and they are going to use this as fuel. This is going to make the activists even stronger within Radcom. It is going to fuel more of a debate of what to do with that $100 million that Radcom does not need. Radcom does not need $100 million. They've been printing cash until now. They said that they're going to continue to be EBITDA positive despite this mess. So, dudes, what are you doing with that cash? Do something with it. Give it back to us. Buyback, special dividend, those are on the table. Let's see if they give those to us on August 12th. But in the meantime, the moral of the story is, even if you have a great AI story, like Apple has a great AI story. But the same thing that happened to Radcom just happened at Apple. Look, Apple's down 9%. Apple being down 9%, if you ask me, is more stunning than Radcom being down 20%. Because Radcom's a small company. Apple, a couple days ago, took over the lead as like the most valuable company on earth. And now it's down 9% today. Why? Same reason. We can't get memory for our products. And this is the one reason I stayed away from this stock, was my concern over this. And God, I was hating that decision as the stock ran to all-time highs. Okay? But in the end, research and facts bear out. And this is why this show is so important for you guys to listen to. Right? Because I'm here to help you understand this stuff. Again, I'm not getting anything out of it. No sponsorships, no advertising. I'm not here pumping Apple stock. I'm certainly not pumping Radcom stock. I give you research and you decide what you want to do with it. I teach you about risk reward, the red lines, the green lines, and all this stuff. Right? And then it either works or it doesn't. I like to hold stocks until, we get good risk reward shifts. And that happens when the whole market realizes what we know, right? When people realize that air is a big deal and the stock goes up a lot and it shifts the risk reward balance, then we say, okay, I just made 7 times my money. My position is 7 times bigger, but the risk reward is not as attractive as it was when nobody knew that this company is great. Make sense? And so that's when you take profits. That's what we do. And we do it over and over and over again. In this case, right, people got too hyped up on Apple. It was premature. The stock's taking a hit. I am interested in Apple at these levels. Apple is going to be a huge winner on AI. They're not spending a ton on CapEx. They're going to use Google's AI. They're going to put it on iPhones. They're going to make a mint. They're going to be great beneficiaries of AI. Okay? So plus AAPL goes on my sheet of paper for after the show or Monday to either sell some puts or buy some of the stock to start getting a position back in Apple on this pullback, because at some point they're going to figure it out. CXMT is out there increasing their capacity, so all these companies that are suffering from memory loss, it's an amnesia cycle, can get memory that they need to build their products and sell it to us. Okay? Which incidentally brings us to Energus Watt. This company has gotten smoked for multiple reasons. Obviously, we had the sell the news, right? It was buy the rumor, sell the news on them getting in the Russell 2000. Okay? The risk reward got pretty close to the top of the channel. Right? We were way down here, and then we were way up here. So obviously, right, when a stock doubles or triples, you're taking money off the table, and you didn't have as many buyers as sellers at this point, and the stock started falling, and then the market started falling. And then, right, as I showed you last week, let's see. I'll just bring it up here because I don't know where it is. We had a flattening out of their AWS deployments. Okay? It's been 2 months. It's gone nowhere. In 1 month, it went absolutely berserk. It went from 5 to 60 in a month. So yes, the stock should have gone crazy because the AWS deployments were going bonkers. But then all of a sudden they flatlined for some reason. Makes you wonder if Watt is also having trouble sourcing components. Now, should you sell your watt here if you kept it all this time? I don't know, man. I mean, we're getting pretty low in the risk reward channel, right? You've had plenty of chances. If you watched the video, listened to the spaces, and read the article, like I said at the beginning of this show, the instruction manual, then you knew to buy in early, buy when I buy. And when the stock gets up, I'm not going to tell you to get out because I don't want to panic the market. But people who learn the lessons will know if you've tripled your money, doubled or tripled your money, and you don't put your initial investment in your pocket, shame on you. Okay? Because the risk reward has gotten worse and the stock price has gotten way better, that is a sign to take profits off the table. Okay, and now we've pulled back to levels where we were when I first initiated coverage officially. Right, I've been talking about this stock since it was single digits, so we're still way above those levels. But the official spreadsheet, I waited because I want to reward people who pay attention on this show. Right? So we're right about the same levels, despite what's going on here in terms of the flattening of demand and the potential that they might have some component issues. So be careful there. But, we've had some good news. Okay? On the flip side, Energus news. Let's bring it up. Let me see. FCC. There it is. Energus PowerBridge Pro Plus received FCC. In fact, I got it. Let's see. We close that out. That was next on the list anyways. There is your Pro Plus certification by the FCC. So, another hypothesis on what's going on with those deployments is this. I should have kept this on the screen. Underneath here. These are proof of concepts. Look at these companies, bro. Amazon in the EU, Amazon Fresh, Amazon's extra large package delivery unit, McDonald's, Mondelez, 7-Eleven, Tosca, if you don't know who that is, look it up. It's a global monster. The United States Postal Service and WFM, Whole Foods Markets, all those companies doing proofs of concept. All these companies looking at Energus' solution. So why didn't the deployments keep moving higher? Could be the components, but it also could be that they were waiting for this certification because PowerBridge Pro pulls together multiple capabilities that is until now served by multiple boxes. Okay, so their existing customers have been putting in multiple boxes to make everything work. A bridge, a gateway, right? And now they can get it all in one box. So the new incoming customers that said, this is awesome, we want this, but we're going to wait until the PowerBridge Pro Plus gets FCC certification because we don't want to start putting in multiple boxes when we'll be able to get just one. This is very common in the technology industry. When you see a company announce a new product coming out, the sales of the existing product drops because people are willing to wait a few weeks or a few months or even a couple of quarters for the new product to come out. Well, guess what? This is effectively the new product coming out. This FCC certification, because now they can move forward with these products going into commercialization. All right, so that's good news there. All else being equal, I think the story remains the same with Watt as it was when I first picked it. The only difference is we've had a crazy round trip from 14 to 37 back to 14. Okay, what are they going to announce for the quarter? I don't know. It's still early days, so I wouldn't be surprised if it's a bad quarter. But we got $7 in cash. That's half of the market cap. They've got an estimated $100 million of intellectual property. So if half the market cap is cash and the market cap is 77 million, then the actual company is only valued at 39 million, but with 100 million of intellectual property. And that intellectual property is serving them well because it seems like there are more and more use cases proliferating in the industry. So not only do we have pent up demand in those POCs that have been waiting for this FCC certification, but we have an increasing number of ways that their technology can be used. And more than likely requests being made for them to make those technologies available. So this brings up a very important thing that you need to decide about your stock buying, okay? Because we're going to talk about Gatekeeper next. And Gatekeeper is on fire. En fuego. End of story. They got crazy, crazy momentum. Unbridled, unquestioned. Engine is running on 10 momentum. Okay? And the cheat code, but also the toughest thing to find, is a company that is operating on all 10 cylinders, but trading as close to the green line as Watt is right now, as close to the green line as Radcom is right now. Okay? So there's two different ways that my portfolio runs. Two types of stocks. There's the ones that are too cheap to resist, even though they're not operating on all cylinders. And these companies are the ones that miss the quarter more often than not, provide disappointments more often than not. And to me, that's okay, because the ones that report good earnings, which happens often, they take off immediately. I mean, they go berserk, right? They become multi-baggers. And the ones that don't, they don't go down that much because they're already down. They're already low. There's only so far down you can go. Radcom didn't lose 50% on this horrible result. It went down 20%. Because there was only so much down it could go before it becomes attractive to investors to buy those shares. Because what my mentor taught me, you're getting paid to wait. There are institutions out there that are very happy to make 15% per year. Okay? 15% per year. You basically only need to double your money every 5 years. Okay? So for somebody, an institutional investor looking at Radcom at $10, if he or she thinks that this stock is going to 20 in 5 years, they're buying the stock here. That seems easy. This is an AI beneficiary in a world where AI is accelerating. And all we need is for Ericsson to get their memory allocation and the AT&T deployment moves forward and Radcom's off to the races. Don't quote me on that, right? I haven't confirmed that that's actually the case, but that is, I believe that that's exactly what happened based on the data points I've gathered. Okay? And if that happens, then this stock could be at 20 before long. Before long being not 5 years. All right? Uh-oh. We have a trend line alert on AVEX. It's crossed up. Look at that. It's trying to break out. We'll see if it does. Okay? This is a company. We'll get back to AVEX. I'm going to make a note of it because we got a trend line alert right in the middle of the show. AVEX. We'll talk about why we're getting a trend line alert and what you should do about that. But let's get back to the conversation at hand. So you've got companies that are too cheap to resist, where you have to be patient. You have to be patient because you will get paid to wait. How you size that position is up to you, right? But then you've got the second type of company, Gatekeeper, that is running on all cylinders, that is going absolutely berserk. But see, this stock is not close to the green line like the other ones. That's the unicorn. If you ever find a company that is doing what Gatekeeper's doing right now and is near the green line, you have found a unicorn. And you will probably multi-bag. And that's exactly what happened when I found TSSI. That is exactly what happened when I called the gold mine alert on AEHR. That is exactly what happened when I told you to buy Gatekeeper here at 30 cents in the spring of 2025, right before they went absolutely berserk, getting contract after contract after contract, winning, including New York City. Okay? If you win New York City, that pretty much says you might be the best player in the industry. And a few years ago, they weren't. They were winning 1 out of every 6 deals in the industry. That made them very average. Very average. Almost perfectly average. But somewhere along the way, they figured it out. They figured out how to be better. How to be better than the competition. And now they have Toronto, New York City, Philadelphia, LA. That's 4 of the 6 largest transit authorities in North America. And we have these mandates. Go to my website. This is not, and again, I don't make any money for getting you to go to my website, right? But there's resources here. And somewhere in here, you will find Gatekeeper articles. Oh, this is crazy. I totally did not mean to do this. Thank you, God, for helping me save time on the show. Right here, legal mandates for video monitoring. This is the exact article I was looking for. Okay? You want to find this article and read this so you understand what's happening and why Gatekeeper is running on all cylinders right now. Because not only did they become competitively top-notch in the industry, but the industry is absolutely desperate based on these mandates. They have to buy this equipment and they want to buy it from Gatekeeper. And that's why they just gave us a record quarter of $12 million. Record quarter, $12 million. But they've been booking $24 million per quarter for the last 3 quarters. 24. But they're only recognizing 12 so far. And when it comes to memory, that has hurt Radcom, that has hurt Ericsson, that has hurt Apple. Gatekeeper stockpiled memory and signed contracts with their customers that said if memory prices go up, our prices go up too. And the customer said, yes, sir, Mr. Gatekeeper. If memory prices go up, we pay you more under this contract. Their profits go up. Their profit dollars go up as memory prices go up because they stockpiled this stuff. Brilliant. So everything is going for these guys. The only negative is that you don't get to buy it at the green line. But guess what? That's a unicorn. You're almost never going to see that. What's beautiful is, with all that momentum, they are not trading near the red line. That's the important part. You're getting all that momentum, great quarters, great press releases, continuing. I mean, I told you this would happen, and since I told you it would happen, we've had 4 press releases in like 2 weeks from these guys. After it was quiet for months. That's what happens. And then people wake up to the fact that they have booked 72 million of contracts over the last 9 months, but only recognized 12 of it, and the stock takes off. And all it needs is a little push and confirmation above the 200-day moving average. I'm going to take my profits, stupid. Stupid, you don't understand. If you are selling this stock on the basis of the 200-day moving average, based on what they're doing, you are dumb. Okay? Because the last time the stock broke through its 200-day moving average was right here, and it proceeded to immediately go straight up 217% in 6 weeks. And so if you were waiting, if you, at the 200-day moving average, sold your stock because there's resistance, and then it broke above it, and you said, oh no, I'm not going to chase it here. And it kept going up. I'm not going to chase it. Boom. I'm not going to chase it. Boom. I'm not going to chase it. Boom. I'm not going to chase it. You missed that massive run because you were worried about the chart instead of worried about risk reward. You missed a triple in 6 weeks because you were worried about a chart, the wrong chart. You were worried about the technical chart, the moving averages that the 10,000 clowns show you every day on Twitter, instead of these red and green lines that only one person, to my knowledge, still nobody has come to me and told me that somebody else is doing these lines. These fundamentally based risk-reward lines. So it's only one. And here it is. And this stock is not trading anywhere near where it belongs relative to the momentum they have in the market. So that is a friend gatekeeper. Now, back on the other side, the too cheap to resist, you got IZEA. Okay? Look at that. Beautiful. Right? Not a unicorn yet because we need that momentum in the business. They're fighting against last year's revenue comps, which were huge because dumb management was taking on business that was not profitable, and new management said, we're not taking that business. We'll take less revenue but more profit. That's smart, but it won't look good on the press release. But these guys have $3 of cash and the stock's at $3.38. You're paying 38 cents for the stock. That could go to 10. Okay? That's basically what's going on here. All you need to do is wait and get paid to wait. Doesn't always work, but most of the time it does. So I own a large number of shares of IZEA because of that. And we have some news here. Not news. This is a data point. So a lot of people wait for press releases. 95% of my research is not press releases. 95% of my news is not press releases. This right here, this is some talent manager in France, I guess. She was invited to a unveiling of the new trailer for the new Dune movie. Can't wait to see it. Can't wait. Right? But invited by who? Invited by Warner Brothers Entertainment and IZEA. What? What is IZEA doing in the same breath as Warner Brothers Entertainment? I told you, Warner Brothers loves IZEA. Warner Brothers is using IZEA on all their movies. And they're making tons of money by using IZEA on their movies. So it's not long before you should see this happen with other movie houses using IZEA. And once that happens, once those sales cycles play out, right, and those other movie studios say, whoa, who are you guys again? And they say, yeah, we used to work for the iconic ad agency that invented the Marlboro Man and the Pillsbury Doughboy, and say no more. Come on in. What do you want to talk about? Advertising? No, we do advertising already. Oh, you do advertising for our competitor Warner Brothers? They're using you for all their movies now? Because you're making them how much money? Okay, we need to talk. But it still takes months for that talk to develop into a commercial contract, plans. Okay, we're going to start you out with this movie, and that movie comes out in 6 months, so they don't make any revenue for 6 months even though they've landed the customer. And so what you end up seeing is press releases, earnings announcements that don't look good, but in the meantime, momentum is building under the covers. And that's why the paid to wait is there, because you never know when something might pop. Somebody might acquire these guys. They might report a surprise monster quarter, announce that some monster studio has decided that they want to use them for all of their movies. And if you get an announcement like that, the stock could shoot straight up, right? It goes from 340 to 440, and you just missed a whole dollar on a stock that only has 40 cents to give before it gets down to its cash level of $3. It makes no sense. You're giving up dollars of opportunity for dimes of risk. And if it drops down to 3, guess what? I'm backing up the truck. If it drops down to 270 for some stupid reason below its cash level, I'm backing up the truck even more because I'm getting paid to wait. Because you've seen it time after time when a stock gets down to the green line level, 80-90% of the time, you make money from those levels as long as you are willing to wait. Okay, so that's the IZEA news. There's the new gatekeeper announcement. You can look that up. I'm not going to spend time on it because we are way overdue. We're past time right now. I'll talk about this next week. This is kind of like, this is just to show you something of, first of all, I've been following AIR for well over 10 years. This is proof of it. But this right here, right? They reported this. Look, this is an absolute, the worst quarter you can imagine from a company, almost. $1.68 million in a whole quarter of revenue. They did 6.63 here. They did 4.6 here. It dropped all the way to 1.6. You think what Radcom did was bad? This is bad. But wait, this quarter got reported right around, let's say, April 1st of 2016. Let's see what happened to AIR stock right around April 1st of 2016. So we can see the disaster, the carnage that occurred in this stock when they announced that absolutely horrible quarter. There it is. There it is. There's that horrible quarter. The stock spiked. It pulled back again, but from this level right here, over the next 12 months, the stock went up 470%. Okay? Those who didn't understand risk reward missed out on a stock going from $1 to $6, a $5 profit for the fear of what ended up being a whole, what is that? 10 cents. From right here to right here is 10 cents. Missing dollars for dimes. All right? I said I wasn't going to talk about it. I ended up talking about it. All right. Let's speed this up because we got to get the Q&A. Holy cow. America's Fighter Force is running out of margin. In short, TPCS. Okay? The drumbeat continues. This is the U.S. government saying we need more fighter jets. Okay? And that is the kind of fighter jet that TPCS is serving into. Okay? So, the drumbeat continues. The momentum continues. Oh, but wait, there's more. In fact, there's something way better than the government saying they want more fighter jets. It's the Navy actually putting money where their mouth is. And here it is. Okay? Boom. There it is. Bam. In your face. Goddamn. This is the dope jam. All right? $77 billion of orders. All right? $77 billion for 9 Virginia subs. More importantly, and 5 Columbia subs over the next 5 years. 4 years. Let's see what I've modeled for TPCS. Look at these massive numbers, by the way. All right? I've got TPCS potentially doing $2 of EPS in 2030. Okay? $1 in fiscal 28, which is just 1 year away. All right? $1 of EPS for a stock trading at... Hold on. We got to fix this chart. There we go. We got to move to the present. $4.70. $4.70. A company delivering $1 of EPS doesn't trade at $4.70. Now, they're not delivering $1 of EPS today, but that is what it looks like they can do based on if the government gets what they want. Okay? But what the government wants, I estimated to be 6.4 Virginia subs. They just ordered 9. They just signed a contract for 9. My numbers are wrong. This is not what the government wants. The government wants more than this. The contract was also for 5 Columbia subs. My model estimated 2.6. Bro, if I move this model up to account for this new deal, these numbers all go way higher. I'm not going to do that at this time, right? Because this is crazy enough as it is. This is like not credible, okay? I'm actually risking credibility. I'm questioning my own credibility when it comes to this, okay? And so when you look at this, just know that if the government gets what they want and the drumbeat is getting louder to get what they want, they're putting pressure on Boeing. They're putting pressure on General Dynamics. They want more subs. They want more Virginia subs, more Columbia subs, more F-15EXs. They want more CH-53Ks. The CH-53K, you see this 24 right here? This 24 could be 48 based on what I'm hearing right now. Okay? It is a massive move by the U.S. government to increase its military might. You heard the rumors that Trump canceled an attack on Iran because we don't have enough missiles. We got to build more missiles. You got to hold on, Mr. President, because we're going to run out of missiles. That's embarrassing. You can bet. I mean, it's Donald Trump. Can you imagine how pissed off he was? Get me the CEO of Raytheon right now. Get me the CEO of Boeing right now. They sign deals. They put pressure. It's been working. They have been delivering more. And TPCS delivered a beautiful quarter of results. The best conference call they have ever had. And we see the momentum continuing to build even as the stock remains not too far from the green line. So this is pretty close to that unicorn situation that I talk about. These guys haven't completely proven themselves, so people are a little, justifiably, they burned us before. That's why the stock's cheap though, stupid. If it was so obvious and easy to see, the stock wouldn't be down here. That was the case with Gatekeeper back here. Nobody wanted to believe me either when I told you to buy at 30 cents. Nobody wanted to believe me either when Kraken was down here when I said buy. Look, when I said buy, the stock did not move for weeks and finally started taking off and then came back down before really taking off and tripling in value and then tripling in value again even after we got out. Okay? This is the difference. Human beings are pack animals. And you have to ask yourself if you want to be part of the pack or if you want to be part of the 1%. Because the average person does not become a multimillionaire. But you are trying to be. Which means you cannot do what everybody else is doing. If everybody else is doing it, don't do that. Because you're going to get the same results they get. Which is subpar. No pun intended. Get it? Subpar. Okay, what do we got left? All right. Continuing to tease my new pick to reward those who know how to do research and fill their notebooks with information. Okay, I gave 6 names last week. Okay. And any one of them could be the new pick. And I know some of you out there have figured it out or think you figured it out. I see how the stock reacts. And basically what's really funny is every week I come out here and I don't pick the stock, partly because I see you guys spiking the stock ahead of me picking it, which tells me that, and more importantly, I see the stock tank after that. Okay? which tells me that you're just trying to scalp off of people. And that is, I'm 100% against that. I wish I knew who you were. Buy what you intend to hold. Do not buy extra to sell to the poor people who come in scrambling for the stock after I name it. Okay? I've been intentionally trying to not make these stocks spike so that everybody gets a chance to buy in. So, no, I won't pick the stock if you're spiking the stock ahead of time. If I feel like I see that there are people out there that are buying more shares than they intend to hold, simply to make a quick profit off of people who are coming in late. F you. I'm Robin Hood. Okay? I'm here to help everybody. And if you don't understand that, I hope you understand that. Because then you're my type of person. I get it. I get it. You want to make extra profit. That's cool. I get that. But some of you are malicious. Some of you want to make a profit at everybody's expense. And that's not cool. The rest of you are just trying to make your own profit. And that sounds cool until you think about what I just told you, which is I don't want people to be taken advantage of. By the way, I definitely don't sell these stocks. Minimum 72 hours, 3 trading days after I pick them. I'm not touching them at all. No matter what, the stock could triple over the first 72 hours, and I'm not selling a share until after 3 days to let everything sink in, for everybody to have a chance, blah, 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 right? To let what happens. And if you do that, then that's cool. But if you are looking to scalp off of somebody else's coming in late, you're buying tickets to the game so you could sell it to somebody else for a higher price, I'm not cool with that. Okay? That's not what I'm here for, and I'm not going to enable it. So, as of right now, I'm not going to make this an official pick. But I will provide more clues so that everybody gets a chance. Right? Because I don't care what the initiation price is. I'm not trying to make a name for myself. I retired from an industry where I had made a name for myself. I made a name for myself 25 years ago. I retired 17, 18 years ago, whatever it was. Right? I don't care. I don't care what the price is when I make it an official pick. I did that with Watt. It was a single-digit stock when I started talking about Watt. It was 14 before I made it an official pick. So you guys know you're not going to take advantage of it being an official pick. Everybody's going to get a chance here. And here's more clues. Okay? This is huge. This has been huge for a while. GE for years has wanted to make ceramic matrix composites a centerpiece of its aerospace technology. Okay? And what this is that you've got silicon carbide mixed in, right? And it replaces nickel in these engines. And what it does is it makes these engines perform much better and respond better to high heat. Okay? These engines with these ceramic matrix composites, they could get up to like 1500 Celsius. 1500 Celsius. And these composites will continue to protect them. This is the magic of silicon carbide. Okay? And demand, we heard about, first time you heard of silicon carbide from me, it was EVs, Tesla. Next time you heard about silicon carbide from me, it was AI, semiconductors. Now you're hearing about silicon carbide from me in aerospace. The need for silicon carbide continues to expand, and this has been something that GE's been working on for years and years. You can see there's lots of videos on YouTube, but only recently has it taken flight in these LEAP engines. And this is what you want to look at, okay? Because the LEAP engines, this is a major upgrade cycle, okay? And I lied about, no, that's right. So there you go, right? The old metal alloys, right? These CMCs can handle 300 to 400 degrees more than the prior metal alloys, nickel-based, okay? It makes them so much better and lighter, by the way. So they're more efficient, they're more reliable, and now you've got a program out there where and I lied. It wasn't seven. Oh yeah. I said in Celsius, 2,400 degrees Fahrenheit you can handle. And this is a major upgrade cycle that's happening now. These LEAP engines are ramping up, and as a result, GE Aerospace is going to need more CMCs. They're going to need more silicon carbide, and there is a play on this that I don't think I'm going to talk about this week, but gave you guys another clue. Okay? And what I will tell you about it, because if you find it, you'll see this, and you need to know this up front. They have a bunch of cash. Okay? They sold a unit. And by the way, this company looks just like Air. When I showed you that spreadsheet and Air with that crappy revenue number, this company is giving you that same crappy revenue number right now. That's called a trough. Okay? That for Air was the trough before the takeoff in their revenue that made the stock go up 5-6x. That's what happens. Right? There's always a trough before takeoff. And capital equipment. So this is a capital equipment company. They're poised for takeoff. They're giving the crappy numbers now, so nobody's been paying attention to the stock, just like Air when you saw that chart. But they sold one of their business units to bring in a bunch of cash. They also have real estate, 2 major pieces of real estate that are being carried on the balance sheet for roughly $10 million. Well, I looked up the address, the square footage, the capabilities, what's in a whole real estate analysis of their properties. Guess what? They're worth closer to 30 million, not 10. And as a result, when you put together the cash and the real estate, what you get is something on the order of $7 to $9 per share of cash and real estate. This stock is trading for less than that as we speak. Okay? So you are paying less than cash and real estate for this stock and getting the benefit of silicon carbide, the benefit of these CMCs, of which GE Aerospace is their customer. So as long as GE continues to be their customer, GE is about to order more equipment from them and turn that trough revenue into a takeoff. You get what I'm saying? So this is kind of the primer before I actually make an official, right? And that's great because for those of you out there that have been, hoping that I would pick the name so you can sell the stock to people, well, guess what? If you sell off the stock this week and everybody figures out what it is, you're going to get left out in the cold. I love it. That's what I want. I want people to own the stock because they want to own the stock, not because of a spike. All right. So there's your big slate of clues for this week. You're getting a company that is trading at basically cash and real estate. You have activists involved. You have an ex-Apollo vice president who's the largest shareholder of the company. There has been a strategic review initiated, which means, right, you saw they sold off one of their units, is what I said. That's part of that strategic review, unlocking shareholder value. Now they've got extra cash. They might distribute that to shareholders somehow. They might sell off what they've got left in real estate and monetize, right, what is not, they're not getting credit for in the stock market. This stock can be a multi-bagger with very low risk because the cash and the real estate is the backstop. We'll talk more about it next week. All right. In the meantime, I think what I just told people, a lot of people are going to figure it out. A lot of people are going to be buying the stock over the next week before I announce. I did this with Radcom, by the way. The last pick, and Watt. I roll it out slowly until I make it an official pick, right? So, boom. There you go. I think that's it. Let's see if there's anything else in the notes. We talked about Energus already. Yep. There's a whoops. There it is. Already had one of them. And we talked about Isaiah. Movies are hot, by the way. Movies are really hot. I mentioned DBOXF as a potential new pick. DBOXF. Movies are hot, and D-Box is doing really well. I like that company. And as you can tell, based on what I just said, it's not going to be the new pick. But it might be the next new pick, so stay tuned. And then AVAX, I promised I would talk about. This company, to me, in short, because I got to get to Q&A. We're going straight to the lightning round on Q&A. I'm going ham this week. What we've got with AVX, in my opinion, they just got some massive orders. They're doing great. They're winning deals. This company is doing very well. It's doing very well. One problem. The IPO price was $20 and it broke IPO price. And when that happens, institutions bail. Okay? And they did. And so we have a problem here where drone stocks are out of favor. AVEX broke its IPO price. And so it's getting vilified. And I put that alert to see, right, to let me know when, what's the right chart? There's a good chart. When it breaks this downtrend. Now, I don't know if this is the downtrend or, right, this is technical analysis. This is not rock. This is like mystical science. Call Dr. Strange. But if this is a breakout, then maybe the stock finally starts to get respect again. But keep this on your radar screen because this is a good company that I don't think belongs down at these levels. We already made great money. I told y'all, I didn't tell you to buy, but I told you to buy at 23 because it should be worth closer to 40. It went from 23 to 40 in a heartbeat. It came back down to 23. We bought back in again and went to 40 again. We almost doubled our money twice. We got back in at 23 and it dropped from there. I bought more down here. I've been buying at these trend line levels, right, when it's oversold. So I got some nice shares down here. And so I'm actually up on the shares that I bought down here, even though I'm down on the shares that I bought at 23, right? So I'm down, what, $6 on these shares, but I'm up $3 on these shares. And that helps offset it. You see, this is what happens when you understand the value of a stock, because even when you lose, you can end up mitigating the loss by doubling down, so to speak. Okay? All right, so that's that. Man, we'll save the rest of this for next week. This is not, I keep pushing this out, probably because it's not that important. When I have a week where there's not much to talk about, I'll finish this all up. Let's go to Q&A. If you love what I'm doing, if you love all this information, which comes from, this is stuff that Wall Street pays for, okay? This is stuff that Wall Street pays for. If you love that I am doing this for you every week, give me that thumbs up, okay? That's all I ask for. Let's go to Q&A. If Novel gets control over Iridex, is it necessarily a negative or could it also be a positive? Stay away. Just stay away. It is such a, you don't want to be involved with toxic financings, okay? I like the CEO, really, really, really nice guy, right? But when he tried to tell me the story of what's happening there, right, the math didn't math. He couldn't convince me. And I didn't want to call him a liar because I don't think he's a liar. But what he was saying just didn't really make sense. And they did this financing, and this is a toxic financing. This is a type of financing where a company will short your stock ahead of the dividend that comes along with that financing. It's preferred stock that pays dividend in stock, and it's based on the stock price. So if these guys short the stock ahead of the dividend to drive the stock down, then Iridex has to give them more shares because they're paying the dividend in stock, and that creates more dilution. And then they get that stock as a dividend, and they use that stock to cover their short. It's horrible. It is one of the absolute, maybe the worst kind of financings you can get. Do not touch a stock that has something like this. until and unless they find a way to clean this out, don't touch it. All right. This is why you got to understand capital structure. You have almost none of those 10,000 clowns telling you, and they're not, the people that are covering this stock are not clowns. All right. Let's be clear about that. I have great respect for other people that have been talking about this stock, but you have to understand the capital structure because that can kill everything. What's good? Thank you for all you do. I appreciate that. I'm going to read all the comments later, so please give me the comments. But let's go to the lightning round. TSSI. Does procurement revenue necessarily track with systems? No, not necessarily, but there is a correlation. Okay. Because it's kind of obvious, right? If they're going to do more systems integration, there should be more procurement involved, all else being equal. It's not an apples to apples, but here's my model on the screen right now. You can take a picture of it or go back and look. It's 3:50, so at 1:50, at 1 hour and 50 minutes of this video, here is the model, and you can look at it afterwards and find the correlations. And here's some of the numbers I'm throwing around. I think they're gonna beat this quarter badly. Like really crush the quarter, okay? I might be wrong. I don't like playing quarters, but the evidence says that it's a better than 50-50 bet. It's a great risk-reward bet for those of you like making risk-reward bets, but it's a bet, not an investment. Thoughts on the Radcom pre-announcement? I already talked about that. Do you like the acquisition that Intermap made? Who cares? I don't love it. I don't hate it. The Indonesian project is all it's all about right now. Okay. This is why wait time is so brutal, right? When everybody was hyped up about this Indonesian deal, right? When the hype got to the fever pitch, close to the top of this line right here, that was the sign to take profits. And it's been going down ever since. Why? Because it's wait time. And until the Indonesian deal goes to gold mine, this is a gold mine stock, by the way. It's not acting gold mine-ish, but it is a proven company. Okay? They've crossed the chasm into being a proven company that is gold mine in my book. But a huge chunk of this story, this is abnormal, that such a huge chunk of the story is tied to one deal, Indonesia, that we're still waiting to see if they get. And until that happens, the stock is probably not going to do anything crazy. Similar to what happened to Pesci, right? I got out of Pesci. I told y'all to get out of Pesci years ago during the summer. I forget, was it right here? I think it was right here. 3 years ago. 3 years ago, everybody was hyped up over this Hanford deal, right? And only recently has that Hanford deal come to fruition. Look, it's been 3 years. People that are excited that we finally got the deal have made a whole 8% per year from the end of the great find, the hype phase. The right move to make was to buy it here at the beginning of the great find, sell it here at the beginning of the wait time, and then you could have played it like a grand piano. Look at this, in between these lines. Buy some here in the middle of the range, definitely sell at the top of the range. Buy some in the middle of the range, not back up the truck because you want to back up the truck down here. It never got down here, but you could have bought some here halfway down. And then certainly you definitely want to sell up here because we're close to the red line. There's 1, 2, 3, 4 times you could have made money. And then the 5th time, boom, now we go gold mine. For real. This is what happens with companies. Time and time again, business doesn't happen at the speed of the stock market. Does TSSI have a great reputation for what they do? Yes. Why would they have difficulty getting new customers? Because they're beholden to Dell. It's very difficult. I think it'd be very difficult for them to break out. I hope they do. I love those guys. I know they hate me. They hate me because of what I did. Okay? They're not going to want to talk to me. Hopefully Hopefully they don't punch me in the nose next time we're passing in the hallway at an investor conference. Hey, that's show business. What are you going to do, right? Sorry for the disrespect. I've said it multiple times. If they don't want to get over it, I don't blame them. Is a company paying for coverage a red flag? Yes. If a company pays for coverage, that's a red flag. You will do very well in life by staying away from companies that are paying for coverage. If you back up the truck, what happened here? Here we go. If you back up the truck on an opportunity, can you violate the 10% portfolio concentration maximum? It's a stupid question. If I had more time, I would tell everybody how dumb you are for asking, can I break the rules if? Like, you really asked me if you can break the rules. If you could break the rules, there would be something in the rules that says, but in the event of X, this is the rule. Stupid. Regarding CVV, I'm not talking about CVV. We're not covering CVV. I haven't talked about CVV in the past. You can't ask me about companies that I don't cover. Don't ask me about companies I don't cover. Let's see. Could FedEx's commitment to refrigerated medication delivery benefit what? Absolutely, yes, 100%. I'm looking for question marks at the beginning of the question. I'm skipping all other questions because we don't have much time left. How much do you think TSSI is going to explode in earnings? I don't know. Ask God. Every week after week. This is the first time I've seen you ask a question, so I'm not going to violate you. But these are not questions that you can ask. People don't know the answer to these questions. They pretend to, but they don't. Okay? But what you said is really insightful. Right? Like, I can tell you're a smart guy, what you're saying. I just don't know. Like, you can't figure out the answer to that question of how much something's going to explode. Right? Because they have to give us guidance on that. Or you have to go to Compal and ask them how much they're going to use of TSSI. You have to find some way to get information to do math off of. I don't have any information to do math with. I'm looking for question marks. With Radcom, 100 million in cash and intellectual property, would that be more than the market cap? No, not necessarily, but they spend a lot on R&D. Look at how much they spend on R&D, right? So take the current market cap, subtract 100 million for the cash, and the number you have left, compare it to the R&D that they spend year after year. You're probably paying a lot less than the intellectual capital. Yes, I just haven't done the math on that yet. Trolling, I thought I was commenting. I didn't call you a troll. You're being too sensitive. I don't even know who you... I didn't... Oh, block me, loser. Okay, now I'm going to block you because I wasn't talking about you. I wasn't talking about you. But see, I didn't see you as trolling, whoever you are. So funny. So funny. People getting happily retired from Merrill. See, these Wall Street idiots. You retired from Merrill. I mean, who cares? I know a lot of people who retired from Merrill. And then you come in here and think I'm calling you a troll just because I reiterated my weekly rule. Every week I come and say 2 rules: don't pimp your stock and don't troll. And you think I'm talking about you. You must think really highly of yourself to think I was talking about you because I hadn't even gone to Q&A yet. See how stupid people are sometimes? That's ego. So dumb. I'm sorry mommy and daddy didn't give you enough attention that you needed to get attention here. Can you look at this company and give me your thoughts next week? No. I'm not even looking at what company that is. Bro, you just got yourself banned. You've been a long time person on this chat. I like you. And you just got banned from this for breaking the rule. Like, I can't let you do what you just did. That's it. Congratulations. That's the last time you get to talk about anything on this channel. No more questions. Go away if you want to. But I've seen you on the show plenty of times to know not to pimp your own stocks, and you did, like blatantly. Gone. You guys are killing me. Now we're going to go overtime. I wanted to go into, so me, the troll can be happy. You ruined the show. Question marks. Why does a company having majority revenue from one customer not worry you? Yes, of course it worries you. Of course. You have to take it into account. That's called customer concentration risk. I take that into account, but it's okay. The biggest day I ever had in my entire life, the most money I made in a day, was from a company that had customer concentration risk, and that customer went ham on their product purchasing. Okay? It's the risk you take. Okay? You play with fire, and sometimes you get burned, and sometimes you get a barbecue. And I do the research necessary to maximize the chances that I get a barbecue. So yes, absolutely, it's a great question, a great comment. I do be concerned when you are doing research and you see customer concentration risk. First of all, look for it, and then you have to assess it. Okay, and I do assess it because I don't want to put you in harm's way, but I have to give you, I don't regret picking Radcom at all. I don't regret it at all. It sucks that what happened, but that's part of what happens sometimes. I mean, let's face it, look at this track record. Okay? There's not a lot of minus signs here, and there are a lot of multi-baggers. And that's because of the risk-reward method that I use when I'm doing my research on these names. Good question. We're back on track. We've got two people that make me shake my head, but whatever. Is insider buying an issue you consider before buying a stock, or is that just BS? I don't care about insider buying or selling for the most part, but insider buying is kind of like a cherry on top of a sundae. If the cherry isn't there, I'm still happy with the sundae, but the cherry is nice, okay? If they're buying, but it should be a good amount of buying, not some BS buying. Oh, they bought $2,000 of stock. That doesn't mean anything. Right? And you saw the Watt CEO, she bought $50,000. $50,000 is not a small number of her stock at like 26. And now it's down to 14. So how did that work out for anybody that said, I should buy the stock because she did? It's a cherry on top, not a major thesis. Research is the thesis. A company, right? What the company is doing, the momentum of the company. That's what makes a stock great, not who's buying or who's selling. Recently and on multiple occasions, you said that GeoDrill was trading at or even below the value of their drills. Shouldn't the crean line be higher, closer to the valuation of their drills? That's a great question. But the problem with GeoDrill, okay, is that they can take losses, okay? And the stock, when it goes out of favor, does go down below the value of its drills. So yes, this is a phenomenal question. But no, I assessed the situation. And in this particular case, I felt that it would be irresponsible to put the green line up to the value of the drills because of what is prone to happen when they have bad stretches, which they're in right now. They're in the midst of a rough stretch. This is one of those companies that could miss their quarter, put crappy results, right? And luckily, we're close to the green line. Right? And if the stock does that and goes even closer to the green line, that is a signal to buy a lot more and then get paid to wait, which is what worked the last two times, right? If you did that here, when it got closer to the red line, 220%. Here, closer to the red line, 178%, right? And so if we lose another 21% from here, big deal. It's a 21% risk against a 177% upside potential. In a company where if it drops to 2, who cares because the drills are worth more like 4, 5, or 6. So you're just wait. Patience. That's all Warren Buffett ever did, and nobody now seems to be willing to do that because my money could be somewhere else doing something. Cool. Go play all kinds of games with your money. Just know that Warren Buffett became the richest man ever for a reason, and it wasn't by flipping his money all over the place. It was from being patient. I see these. Thanks. Thank you very much, guys. I'm going to read all these right after the show. Hey, Mark, have you revisited your red line for air? As always, I did. I think last week's show I raised it a little bit. That's the old red line, and then I raised it just a touch, just a touch. Okay, so it's still in, you know, high territory. But remember, I think, can become bubblicious. So if you love air at these levels, just know what you're getting yourself into. You're playing with a little bit of fire because it's high risk reward on a long-term fundamental basis. I told you when the stock got to this level that gravity should bring it back down, and it did. Okay? The stock pulled back under the red line level. I think that will happen again at some point in the future, but that could be 2 or 3 years from now. After a great AI run, the stock could go to 200 for all I know. And that's what you're betting on. Okay? And that is a bet. It's not a great fundamental play. You're not going to see Warren Buffett buying AEHR because from a fundamental valuation perspective, this company is expensive. But if the market goes into AI, if we are in AI bubble mode, because it already started, right? The Qs. I told you, that was bubblicious activity by the NASDAQ. When the market goes that high above the red line, that is bubblicious, right? And what we might have just seen is just a correction in the bubblicious behavior before we continue on to the next leg of the bubble, just like what we were getting back in 1999. Every month, the market was pulling back 6 to 16% every month. We just got a 12% drawdown. So we might be getting this massive rip, and it might be worth the risk to put some of your money towards this, but just know that it's a bet. TSSI cannot grow by partnering with competing OEMs, but the rising adoption of open source AI drives enterprises to build private on-premises data centers and lower costs. Would this help TSSI? Potentially. But remember, they got to still get out from the grip of Dell. Okay, I'm not going to be disrespectful in terms of how I used to portray that, but Dell has a lot of hold on these guys, and until they can find a way to break that hold, that is an issue. Now, let me see. I'm getting some comments from other chats here. Regarding TSSI. Okay. Cool. I think that's it. Great show, great show, great show, great show. Thank you very much. Guys, like really, to my long-term follower, was it AJ? I don't know why you did that. That was disappointing. And I didn't want to ban you. If you hit me up in a couple of months, I'll probably let you back in because you've been on the show for a long time. I just don't know why you did that. That was the most blatant thing I've seen from a longtime follower. That's sad. And as far as retired Mr. Merrill, I hope you didn't get mad that I fired back at you, but you had no business. Like that was crazy what you did. I'd like to understand what I said to you that made you think I was talking to you. But as for the rest of y'all, I love you. You guys are awesome. We got the thumbs ups. We got the hearts going in the chat. We got great questions. You guys come back here week after week. You give me a great audience that makes me feel good. You give me compliments that makes me feel good. You tell me you're making money. That's what makes me feel the best, is that I'm helping make a difference in your lives. And that's why I come back every week on Friday. Money Mark, Stock Talk Live. Have a great weekend. Mamma mia. All right, so what do we got here? I love some of y'all have figured out what the new pick is. It looks like we might have to make it official next week. We might have to make it official next week. Now that enough people are having a chance to get in there. All right, I'm not talking about it. I'm not going to name it. I'm not going to name it until I name it. You guys can figure that out. That's what I love, giving you guys a chance to do that. What else we got?